should I be buying the property cash, or should I be buying it using a bond?
There's pros and cons towards each. So looking at bond, there's pros and cons towards buying a property that way. Even looking at it via the cash route, there's also pros and cons. So it really depends in terms of, you really need to understand in terms of what works for you. So this is what I'd really like you guys to have an open mind when you're looking at this video, because I know there's a lot of people whereby they're cash buyers. So anytime you're speaking about bond, their mind switches off. Or even on the other side of the coin, there's some people whereby they're just focused on bond. So as soon as you are saying, or credit, so as soon as you talk about cash, it's like, that's a red flag.
Buyers are not liable for paying a bond registration attorney, right? Because remember, whenever you're buying a property, you're going to be faced with two lawyers, right? We've always been saying this. You're going to be faced with two lawyers. The first lawyer that's going to call you is the transferring attorney. The second one is going to be the bond registration if you're buying your property by a bond.
If I'm buying it cash, so remember, when you're buying a property by cash, you will not be appointing a bond attorney. So what a bond attorney is responsible for doing is that they are responsible for registering that bond. Because remember, you don't necessarily go to the bank and then sign the papers there by the bank, right? What's going to happen is that there will be an estate agent, and then that estate agent will be working with two lawyers. So the one is the transfer attorney, and then the other one is the bond attorney. So what the bond attorney will then come through and say that, you know what, I remember that when you went into that office for the first time, bro, they had those aircons on, full plaster.
Yeah.
So if you are buying it cash, you are not going to be expected to be paying the bond attorney because there is no bond that will be implemented, right? However, if you are buying it by a bond, these are the costs that would be associated, whereby they will be making an example for us.
Okay, so just as a quick disclaimer, right?
Yes.
This is not 100% what attorneys will charge. With a property that's worth 1 million, you would actually be paying 36,365. If you're looking at it from that perspective, the person that bought the property cash, he won't have to pay this 36,000. So now if I'm not paying this 36,000, this ultimately means that this 36,000 actually stays in my pocket.
Yeah. I've got a question right there, especially referring to your bond attorney.
Yeah.
Is that if I'm putting a deposit, will it make a difference when it comes to the payments?
Yeah.
So we didn't put any deposit down. How much are we paying for our bond attorney?
We're paying 365.
So this is without any deposit, right?
Yeah.
So if I am going to be putting a deposit, how much will I be then paying?
So say for instance, if you do put down a deposit at 10%, right?
Yeah.
If you're putting down a deposit at 10%, you would move from 36,000 to 34,000.
34,000.
198.
198.
Yeah.
So with that being said, would you say then sometimes us not putting in a deposit does actually cost us?
You are paying. You're going to pay.
Sure.
So now I was having a conversation with someone, right, that works in the banking industry. Né?
Yeah.
And they were saying that a lot of people are running away from the initiation cost. Right? We all know the initiation cost, right?
So this is via bond.
This is via bond.
Okay.
So now, remember, if you are going to be taking out a bond on a property, there's an initiation cost. Now, with the initiation cost, you do have the choice of paying it upfront, or you could say that it must be added onto your bond, right? Now, if you look at it from a long-term perspective, that adds up on the interest. Because now remember, looking at it from a perspective, interest. Here's the funny part about a home loan versus a credit card, right? A home loan versus a credit card. In terms of a credit card, the interest rate is high. Ne? Sometimes it gets 21%, 22%, right? But you have to pay it in 5 years. Now, when you look at it from the other side, now someone would say that, no, but interest rate on a home loan, yes, I understand that on the percentage side, right? It's what, 11%. 11 is it 25 now, right? It went down.
Yeah.
It's 11.25. Now, looking at it from a credit card perspective, we were looking at paying around what, 22%. Now, if I'm saying that I'm looking at it from a home loan, remember, it's stretched through 20 years. So now you could actually be looking at the money factor, right? You could actually be paying round about the same amount. Now, how that is actually helped out, or how that is actually evened out, is that with a home loan, it's stretched for 20 years, and then with a credit card, it's actually stretched for only 5 years. So now, looking at it from that perspective, long term, or how much you are actually paying, it could be something similar.
Yeah, man, I just did another example, right, with air deposit, right? Because I looked at it, if we are going to be putting in, because I know from rental perspective, we are more for just trying to put in at least 30%.
Yeah.
Right? So I looked at, if I'm going to be putting a deposit of no deposit, or so if I'm not putting a deposit at all, I'm paying for a property that's going for 1 million, it's the 36,365. Versus if I'll be putting now the 30%, which is then the 300,000 on the 1 million, then my bond attorney will then require 29,695.
So the more deposit you put in, the less it becomes.
That's it. So here's the thing now, is that a lot of people, hence I'm like, bro, I'd rather save. Whether it takes me 2 years to work on my credit and also to work on a good deposit, I would rather save than be in a situation whereby I applied for 110%. For what you mentioned, there was that, guys, remember something is that you can qualify for 110%, but people are not asking themselves a very valid question, that at what cost? At what cost am I owning this property with no money down? So ultimately then it goes to that in terms of just understanding leveraging when it comes to numbers. But man, it's really interesting that when you're looking at property, you can't ignore numbers.
Yeah.
We always say that property investing is a numbers game. So now we're going to point number 2, guys. Remember, we've got 6 points, right? So point number 2, I'm looking at a fact whereby if I'm buying cash, the buyer, of course, will not be paying interest, right? So if you're looking at it from a bond perspective now, the question is, which interest makes sense? And now it's difficult for a first-time beginner that, must I put down 10% deposit? Must I put down 30% deposit? Or should I not be putting any deposit? Because you know, Lebo, very well in terms of if you are buying a property and you are flipping, you know very well and is well informed that I am not putting in a deposit because of XYZ. And you also know if it's for rental, whereby if I'll be buying this property, you already have that idea in terms of I need to put rental down. So you need to put a deposit down. So I did 2 examples, right? So that we can have an understanding in terms of these numbers and the relationships in terms of how much I'll be paying and also the money that I'll be collecting. So example number 1, we're looking at a situation whereby the property, so both properties are going for 1 million, and then let's use also the same interest rate so that we can try and balance them out, right? So property number 1, if I took let's just say that I got 11.25, and then now I realized that after 20 years, if I didn't put in any deposit at all, right? So we bought the property for 1 million, and then our interest was at 11.25%, and then we didn't put in any deposit. So that I then realized that on a monthly basis, I will be paying 10,492 rand, right? Looking at that, after 20 years, I would have paid back 2,500,000. I just had to make sure because I don't want to be that guy who pushes numbers, bro, on a Monday.
Property investor that doesn't know numbers.
So we're looking at a total repayment, right, of 1 million. We didn't put down any deposit. Remember that, guys. We didn't put down any deposit. So after 20 years, we would have paid back 2,518,214. That's example number 1. Please just note that down, guys, right? It's 2,518,214. Then if we're looking at person number 2, same amount. We bought a property for 1 million, same interest, 11.25. Now the difference now is that he was like, let me rather take my time in terms of because it's rental, I understand if I'm not putting anything down, I am going to be paying somewhere somehow. So it's not necessarily no money down. Yes, it's no money down, but it's interest higher. So now this guy was like, you know what, I'd rather wait, whether it's 2 years or 3 years, I want to save. So this guy saved up to 300,000, right? And then they put that 300,000 as a deposit. So in the previous example, we did see that putting a deposit down is to your advantage when it comes to bond attorneys. But now let's look at it in terms of repayment. So if I'm looking at repayment, I'll be looking at from 10, the first example, that guy was paying back on a monthly basis, their bond was 10,492. But now as soon as you put 300,000 down, your repayment on a monthly basis is 7,344. That's a difference, looking at the two scenarios, that's a difference of 3,148. Now I'd like to give this example, hence sometimes if you don't understand, you know, sometimes as property investors, this is where we get things wrong. We don't ask the relevant questions. Because now you see someone who bought a property and then they bought it, let's say they bought it for 1 million. They put that deposit down at 300,000. So now this person is like saying that, you know what, with the tenant that I'm having, I'm really excited. I can see myself grow. But now you went for no money down. Now remember, what does no money down mean? It means that your repayments will be higher. So now looking at this example, this person, option number 2, would have paid back 1,762,750 rands. The difference, guys, between the two is 755,464.
So what we're basically saying is that my 300,000 that I put into this property, looking at it from a 20-year perspective, it would have actually been 755,000.
Are you subtracting it?
Yeah, because now if I'm going to be taking out a loan under my personal capacity, this means that the property needs to be registered under personal capacity. Now, there are some banks that will finance businesses and then use you as surety. Right?
Very few banks do that.
Very few banks do that.
You need to know which guy will help you.
Very few banks will do that.
Yeah.
So you would be the one that would be signing as surety. Né? And then under a trust, that's a whole different thing. Right? So now what we need to understand is that if you are buying a property with cash, you decide in terms of what is it registered under.
Yeah.
So you saying that I'm going to be buying a property, but I'm keeping it under I'm buying it, right? And then I'm buying it under my personal capacity, but now I want to move it into my business. Now, chances are you won't be able to move it under your business because those guys won't be able to actually finance you. The business won't be able to finance you. The banker won't be able to finance you as a business for that particular property.
Yeah. So of course now when you're looking at buying via bond, of course, I mean even via, okay, if I'm buying it via bond, it's difficult in terms of you don't have that too much freedom because you're finding yourself in terms of do you have affordability?
Yeah.
Because now the banks are asking that question, do you have affordability? So it's really difficult to then say that I'd like to buy it under a trust. Okay. So now we move on to buying it via bond, guys. Buying it via bond because I know the pros listed buyer it was for cash, right?
Yeah.
So let's jump on to the pros bond. You know, if there's something that I really like about buying via bond, and this is one of the ways I justify it right now, and I'm happy to sign that offer to purchase via bond, is that remember something, guys. As soon as you sign the offer to purchase, and then the bank approves, the bank is not just going to give that person money before they do their due diligence. The bank has a team whereby that team, number one, they're going to do research in terms of that property because the bank is looking at it from we are investing in a property and banks have experts in terms of this is the criteria, this is the type of property that we are willing to risk. Guess this comes under risk management. Now, unfortunately, when it comes to cash, a lot of cash buyers, I've seen this so many times, and it really hits me level whereby someone has worked like really hard, and now they put 2.4 million into a property that wasn't worth 2.4 million because they didn't know what the banks know. Remember, bank can approve you for a house, but they can reject the whole process because of the property. Now, that's where the danger comes in. You remember that meme, the danger. That's why the danger comes in as a cash buyer, is that do you know what the bank knows in terms of why do they disqualify certain properties? If you don't know, again, you are skating on thin ice. Because now you've got 2.5 million or you've got 4 million and you're putting into a property whereby you don't even understand. If I'm to ask you, what is due diligence? Due diligence is not even only coming through with a, I'll give you one of the biggest one, right? Due diligence is not only coming through with a contractor. Like one of the biggest mistakes that I've seen last week was that there was a property whereby we were interested with our client, we were interested in buying it, and that property was going for about, I remember it was for 2.1 million. And then there was a cash buy, okay, we applied for it, right? And then the gender got approved, but then the bank told us, guys, we're not going ahead with that transaction because, I'm just giving you one. If you want more, you have to come through to our workshop on the 7th, guys. Buy your ticket via Quicket. So right now, I'm just going to give you one. The thing was,
the event is going to be in Midrand.
Yeah, it's going to be in Midrand. So ticket is going for 550. So what happened there was that, okay, I almost named the bank, but that certain bank said that, you know what, guys, we're not going to proceed with this because they do not have approved plans for the inside. So they did have approved plans for the outside, but there were also a couple of structural changes on the inside. So if you don't know anything and I'm giving you this approved plan, you bought it for 2.5 million, what's going to stop that transaction? And guess what? That transaction did go through. So now there's someone who spent 2-point-something million.
It did go through.
It did go through because he bought it cash. He doesn't know, bro. Like if you've got cash, all you know is that I've got 2.5 million. Hence I'm saying, do you realize how dangerous this thing is? It's because now you even find out that you've worked for 40 years to do such a mistake. Guys, we need to take property really serious because we're making mistakes that are dangerous. Imagine making a 2.5 million mistake.
And now what I like about the cash buyers is that the cash buyers will say that I do not have any, I don't have any intentions of selling my property. But now you do not realize that that property might not be the first and last property that you are buying. You could want to move on to a better deal and you need to sell this property. So if you do want to sell this property, then what happens? So the other one that I also wanted to talk about, right, is the tax implications. Now with this one, I don't want to dwell too much on it because I would really want you to go to an accountant so that they can look at your situation and then talk about it from your perspective, right? Now, when you're looking at it from a tax implication, it's either we're going to say for instance, we're buying a property under a business, right? And then our business at this point is able to take out a loan by itself. Now, we are asking ourselves that should I buy it cash or should I buy it, cash or should I buy it using my bond? And how does that actually affect me? Now, if you're looking at it, let's look at it from a cash perspective first. Now, from a cash perspective, if we worked really hard in that particular year to a point whereby we got 300,000 and we have 300,000 cash right now, what we could do is that we could use that 300,000 and buy a property cash, right? Now, if you bought the property cash from a tax perspective, we could actually write it off, right? As an expense, the business. As an expense, the business. Now, if you're looking at it from the other side, looking at it from a bond perspective, we are going to be writing it off until we are actually selling that property. So what we are basically saying is that with one, it's just ripping off the bandage. With the other one, it's, how's it going? Let's go again. So same thing goes on from 1 year to another. So this is something that you have to really talk to with your accountant before you do it. Because now I with us, right, whenever we do something, this is with regards to a tax specialist, right? Whenever we do something with the business, the first thing that we do is that we need to ask our accountant. So basically, our accountant becomes like our parent, right?
You're serious.
Yeah. So now we go, or your chat GPT, then I'm about to buy a
Examples are
property.
just getting better. bro.
We're about to buy a property right now,
Yeah.
and this is our financial situation right now.
Sure.
So what would be better? Would it be us using this 300,000 to buy the property, or would it be better for us to say that we want a loan from the bank in order for us to finance this particular property at 300,000?
Sure.
Now, how this is going to actually be affecting you, or how we need to understand it, is that sometimes it does happen that on the 300,000, the way everything was structured by the accountant, we wouldn't need to pay much taxes on it. So if we're not going to be paying much taxes on it, and that 300,000 is just going to be the amount that we're going to be having, right?
Sure.
This will ultimately mean that we can actually take out a bond, because remember, looking at it from a business perspective, we always want to be using the bank's money unless if that cash of ours is going to be in a situation whereby we have to use it for something that we didn't want to use.
Yeah.
For example, I wouldn't want to use my 300,000 to pay for tax. So if I have 300,000 right now in my bank, and the tax guy is saying that no, we have to pay on that 300,000. Let's say they say you have to pay 40,000 on 40% of the 300,000. If the tax guy is saying that I have to pay 40% from the 300,000, I'd rather just take that 300,000, use it to buy a property, and then say that it's the property where we are actually operating.
Yeah.
Or we could say that this is a property investing company, and then this is us basically buying stock, which will ultimately mean that that would be written down as an expense. But now, if this 300,000 is not exposed, in terms of us paying taxes from that 300,000, then I know that I would rather just buy it country. The thing. What's that thing? Gabon.
You know the hardest part, like what you just mentioned, right? The hardest part about building a business, for me, was whereby I had to be okay in terms of spending.
Yeah.
Like, you know, when you're starting a business,
you don't spend.
you are thinking that I need to build as much and I need to save as much.
Yeah.
But then now when you sit with the accountant and then they come back, they're like, babe, it's looking good, it's been a good year, eh? You're like, I'm fine, we pushed this year. But here's the thing again, Lou, with what you mentioned, is that the difficult part is that it's that balance, because at the same time, as much as you're accumulating these expenses, but now these expenses need to strategically position your company to grow.
Yeah.
Because it doesn't make sense again to say that I do not want a lot of expenses, but then now you're seeing me in all of these wrong places. Whether it's wrong or right, it's up to you how you coin it. But then again, now you find out that you're accumulating these expenses and your business is not growing. For me, bro, if I'm to be honest, guys, that was one of the most difficult stages in my life whereby I was saying, okay, as much as we're working, but where is that fine balance so that when we're sitting with the accountant, I'm not being chowed? The risk of buying an overvalued property is more when you're buying it cash. Like these three, for me, they were right. These three, honestly speaking, for me, they are big enough to make me say that I prefer bond.
Yeah.
Here's the thing again, is that I spoke about earlier on in terms of what the bank knows. Now with this one here, overvalued property, is that a lot of first-time beginners, they do not know what the true value of the property is. Remember, as soon as you go to Property 24, that price is called the asking price. It's not the true value of the property. Now, if you don't even know which direction to look at in terms of when I'm doing research, how do I determine the true value of a property? You are skating again on thin ice. Ultimately, as a cash buyer, if you don't even know in terms of how to determine the true value of a property, you are at risk. And guess what? On the 7th of December, the company that will be coming through, they will be showing you in terms of how to determine the true value of a property. Guys, this is a no-brainer. Like imagine someone who made a mistake at 200,000. Ticket is only for 550 to know the true value of a property. It's a no-brainer, guys. Please make sure that you do buy your tickets, guys. Trust me when I say that it's going to be epic. There's going to be so much value when it comes to things that you can learn. And what I like about myself and Lev is that even after this life, what we talk about is things that you can implement today. We're not talking about things whereby you'll be like, no, you'll be okay after 5 years, or things will be good, or quit your job. We don't talk about that. You can't quit your job. How can we tell people to quit your job whereby when you're supposed to apply for a house, they're going to want your payslip?
So just to close off on my side, right?
Yeah.
I want us to all understand this, right? In South Africa, we have an open market, né? And we are in a situation whereby price is not determined by the government, né? On certain stuff.
Communism, capitalism.
Right? Yeah. It's not determined by the government on certain stuff, right? Of course, maybe on your bread, yes, they can actually regulate how much you're going to be paying for those stuff. But now looking at properties, there's no one that really says that your property is actually worth this amount of money and then this is how much you have to pay for it. You can't go up, you can't go down, that's the amount that you have to pay for it. There's nobody that is like that. So now, if I am asking for a ridiculous amount of money, right? And then Neo says that I love that property. It makes sense why you're selling that property at that amount. And I want to buy it. If Neo has cash, he can buy that property from me, even if it's overpriced. Now, if we are saying that we are using cash, this ultimately means that we need to understand what or how much is the value of that property in order for us to know how much we should be paying for that property.
Yeah.
Now, if we do not know or if we do not understand how much we should be paying for this property, this ultimately means that we are in the risk of buying a property that is overpriced.
Yes.
Now, if we are buying a property that is overpriced, this will ultimately mean that if we want to sell it, you can't sell it because now you also have to wait for someone to be willing to buy it from you overpriced because you bought it overpriced again. So again, there's normal price, there's overpriced. So you need someone that has to buy it overpriced in order for you to at least make a profit from that property.
Yeah.
So these are the things that we really need to be looking at when we are actually going to be buying or when we're deciding that are we buying a property cash or are we buying it bond. If we are buying it cash, we need to know what the banks are looking for in order for us to understand that when we do decide or when we do finally decide to sell that property,
Yeah.
we know that the banks will be willing to actually give the money to other people.